Traders, smart traders, welcome. This is Pedro for another trade idea analysis using smart money concepts. And on today's training here, I'm going to share with you some my analysis on EURCHF. In fact, it's setting up for a really potential good trade setup. So if this is new to you, you're definitely going to learn some stuff. If it's not new, you might enjoy this trading as well. Now, I'm just curious, where in your journey are you in the trading? Are you new to trading? Are you intermediate, or are you an advanced trader? Okay. So let me know in the comment section. Okay. Now, this analysis, only my opinion. This is not in any way, shape, or form any advice for financial advice. This is not any suggestion for you to make trades. This is only my opinion. This is only for educational purposes. So don't sue me, bro. This is if you trade, it's solely your responsibility. Trading your own risks. Okay. Now, let's dive in, and super excited here because I'm looking at a really good setup. All right, let's dive into the concept. Now, before we get started, if you're watching this video, smash that like video, give me some love, subscribe if you're watching on YouTube, hit that subscribe button, and so you get more of these. All right, let's get into right now. All right, so EURCHF. I use smart money analysis. I don't no longer use retail analysis because when the problem with using retail analysis, or the banks 100% manipulate the market, and you actually get to see here in just a moment, and they are constantly setting setups for you and traps. And if you if you're not aware of these the setups of these concepts, you are position yourself in a situation that you're more likely to lose than win. And your losses, even your wins, the risk reward is much smaller versus, so you're potentially risking a lot more than your reward. Using smart money analysis, in my team, the team that I belong to, our risk is typically 1 to 5, 1 to 3, or greater. Okay, so you risk 1% to get 5%, even potentially more. Right, and you will see the exactly here in just a moment and what I see. Okay, again, this video is no way on any shape or form any financial advice or for you to check trades. Simply what I'm seeing, and if you enjoy what you're seeing, then if you want to get more information, click the link somewhere in the description of this video, or drop me a message. Okay, now let's dive into it. So one of the things the strategy that I have learned that we use with the smart money analysis, we look for this concept called bankers box, and basically we look at consolidation. Okay, this is simply what it is, and we're looking here at a 4-hour time frame, and we're looking for consolidation. Okay, and consolidation is where the banks are trapping and setting setups. Now, this doesn't have to be, if you're wondering, oh, okay, so it's a box, basically what it means is the banks are driving price up and down, up and down, up and down, up and down, right? And you see here, so if you are a retail trader, you probably see M's, right? You probably may see an M right here. Let me change this color. You could potentially see an M, if I'm writing this correctly. Let me make this white. I want to make this white. So you potentially could see an M, right? M. So if you see an M, this is a very bad Scrabble. If you see an M, right? You're potentially thinking, you're going to sell, right? Because it's a bearish. Now, you could also be, be seeing, or if using retail analysis, you also could be seeing a W. And if you see a W, so you would be seeing, just click here if I erase this. Okay, let's do this. Let's just change the color. It's taking forever here. So anyway, you'd be seeing a W, right? You'd be seeing one of these would be a W, right? You get the drift. You get the point. So in any case, with smart money analysis, we know the banks are just setting traps. Okay, and what I see here is that the banks are, like I said, driving the money up and down, right? Creating volatility and creating liquidity, right? That's the word, liquidity, that I was looking for. I'll show you. So, and here's the traps, right? So you probably, if you're a retail trader, you probably look at this as resistance, right? Oh, this is resistance. They're coming up here, and you put your stop loss up here, right? You put it here. Now this is creating liquidity here. You also be doing the same if you see, let me just do a cologne. If you see an NAM, the banks are creating here lower lows. So you're thinking this is support. So you'd be looking at a buys, right? So cologne, you're looking at a buys. So you're putting your entry orders down here, somewhere down here. Now, using the banker box, what happens is this strategy, we look for consolidation, and we wait for and wait and have the banks show us what direction the banks are going. So what happens is they went here, as we see here. I'm missing here one of my stuff. The banks took off and bullish, right? So I can't even see my favorites. I don't know where my favorites are. So they bullish, right? They took the money up. They took the money up, right? So if you were here and if you were selling, they created us, basically blew out your account. Now we wait. The concept, one of the big things about using smart money analysis, we wait for the banks to show you their hand, and now you see a nice flag. I don't see where my favorites are. You see a nice flag. And a nice flag, all I'm waiting here for is basically the banks. I'll just use the nice flag, right? This is what they're doing, up and down, right? And I'm waiting here for this 4 hour. This 4 hour here. So this is what I'm looking, right? And the banker, I'm looking for the banks to come to this, probably this area, and I'm looking for a reaction. Now this is a 4 hour. If you look into the 1 hour, they came really bullish, but I can see they might be starting consolidation, and potentially what the bank's going to do here, they're going to create some traps more, and they're going to create a little consolidation, and then potentially going to mitigate this 4 hour candle and go take it up, and then potentially they're gonna come back down and do a double mitigation to take it all the way to the top, right? And I'm just scrambling here to take it all the way to the top. So they're gonna do something like that. I mean, I showed you earlier anyway. And so the potential going to come here to this 4 hours, and I have another 4 hours candle down here. And this candle here, we call it a banker's candle. This the red candle right here. This is a banker's candle, and this is also a banker's candle. Now, which one are they going to mitigate? Not sure. We have to wait and see. So, but let's just say that they come and mitigate this area right here, which the way it's coming, it's very likely that it will. That's what I'm looking at. And then we put our stop. I put up my stop by my entry here, pending order, covering the wick. And so if I go, and let's just say that we just want to go up here to these highs, right? This high. This is a 1 to 5. So you risk 1% would be over 5% gains on your account. Usually I do 2% risk, reward 10%. Now, imagine if you just do one of these trades a week, you get this win. Imagine what would have happened to your account. So this is smart money trading. Now, I know this concept may be a lot new to you and maybe a little confusing, a little overwhelming perhaps, but this is actually really simple. As you see here, we don't use any trending lines, any indicators. But one of the things that most traders do, which is a big mistake, is not looking at the big picture, what the banks are doing, what the trends are. If you see here, the trend and this was a bullish trend. Where is it? Bullish trend, right? Up, bullish trend. Now it's creating a correction, right? Correction. And it's mitigating this daily candle, one of the daily candles down here. Okay? This daily candle. And that's what's holding. If you look at pretty much to the pip that the banks mitigated, right? Mitigated right here, this candle, right? With a wick. So this doesn't happen by occasion. This is all on the other algorithms of the bank because they are manipulating the market. So if you know, smart money concepts, you are basically riding the bank's coattail, right? So you're positioning yourself in their favor, behind their coattail. So you're more likely to win, and you basically follow where they're going, and that's what I love about smart money trading, smart money concepts. Now, hope that you enjoyed this training. If you did, you want to learn more, if you want to hang out with my team, the team that I'm a part of, for a whole 7 days, Monday to Friday, see exactly how we do these trainings, learn more about the banker's trading strategy, and the only 2 trade setups you ever need to know to be a successful Forex trader, then again, drop me a message or click somewhere in the description of this video and check your inbox for more information. I look forward to seeing you on my next video. Have an amazing day. Talk to you very soon.